traditionally, China's been a key driver in this area of the industrial metals because of the infrastructure spending. But the reality is, as I mentioned earlier, if they are going to spend more on infrastructure, it's no longer on bridges and roads and airports and ports. That will continue, but the emphasis will be more on technology and communications, and the dependence on industrial metals here is a little less. So from that perspective, I would argue that the commodity space, maybe with the exception of gold, is still going to go through quite a difficult times. Of course, we may come off from the lows we've seen back in March, but again, back to those long-term averages in commodity prices, I think it would take a lot more recovery in the global economy.
Okay, and that shift in the focus on China's economy and their agenda, if you will, do you think that's been accurately priced in the equity markets as well?
I think so. I think if you look at, for example, the tech sector or consumer sectors in China, they have rallied quite strongly in the past few weeks. And valuations is a little bit lofty right now if you look at projected earnings for the next 1 to 2 years. But if you look at the next 3 to 5 years, I argue that there could be still more room for rally if you think about the consumer behavior in China. So from that perspective, I do think that the market is preparing for a greater emphasis on consumer spending as well as infrastructure investment.
Okay, fair enough. And I'm curious, just looking at the region more broadly, because we are in this interesting period, as you say, where there's still a great amount of uncertainty, but we have seen risk appetite holding up. So what is your preferred play at this moment?
Well, I think at this point, we still like fixed income, especially in the area of corporate credits and selected emerging market fixed income, partly because of the hunt for yield is still very much ongoing. Central banks are keeping rates at zero, if in some cases negative. So from that perspective, while valuations in equity does look lofty, I do think that fixed income is the core part of asset allocation. On equities, we like Asia, we like China, we like tech in the US. But again, these are much longer term plays rather than just the next 3 to 6 months. So very much we are focusing more on the fixed income world, where we do want to control our volatility in the portfolio, but also to generate income and interests for investors.